All right, welcome everyone to our next episode of Secrets of Trading. And today we have Andy. How's it going, Andy?
Hey, good morning, guys.
What's up, Andy?
Hi.
So we're gonna talk to Andy about pretty much the same thing that we have talked to other people about. Who is Andy? So we're gonna start off with that, and then we're gonna see pretty much what was Andy's experience like into the markets and what were some of the things that he learned. But I do think he has a unique perspective to the markets because of his background. So we'll find that out right now. All right, Andy. So pretty much, who is Andy? How did you get started into trading? And, what's your background like?
Well, hi, guys. Good morning. Thanks for having me on. I'm happy to talk about all this stuff together. I actually had been in mortgage financing since 2005. That's actually how I got started in understanding finance. Well, I should say misunderstanding it in the beginning. Because when I came in, I was, 26 years old. I was young. It was the heyday, and I didn't really completely understand how all the technical sides of the financial market worked. But I found out really quick in the crash of 2008 and 2009, where I literally lost everything, except for my wife and my family, right? My people. And that's actually when I started learning how interconnected so many things are, as far as our world and our economy. I was younger. I didn't have any exposure to it prior to that. When I went to school, I was in a band and played drums, and I was playing music and working. That was my life until I started doing mortgage, and then that's when I started getting exposed to the markets. And I actually started learning about Forex and trading about 2019 is actually when I started. And I remember actually being in Paul's group during Asian sessions, and Sharma would be in the YouTube comment section, just railing on people. Because she'd actually be saying solid stuff about the Fed, monetary policy, And by 2019, I'm like, okay, I've been around mortgage for, almost 15 years now. I've seen so many things happen. I saw the market crash. I learned about everything and how to avoid that again. And then I hear her like just saying the truth about all this stuff, and I'm like, oh man, she's taking people to the woodshed right now. And she would just take so much heat.
What would you say?
People would ask me like, what's happening with the fundamental side, right? And so I would kind of like bring that in. People are like,
they try to argue with her about it.
Yeah, they would try to ask me like some, random questions, and then they're like, yeah, this doesn't matter, that doesn't matter. I'm like, well, think about it. They're the ones who are making the decisions. You really think what they say doesn't really matter to the financial markets?
Yeah. And there were times even Sharma and I didn't agree at first about things because we were coming at it from two different perspectives. And I'm looking at things from, well, what does this affect monetary policy as far as mortgages and the state of like finance for real estate, and the cost of money and affordability and that kind of stuff on the consumer level, because we see that firsthand all the time. So structurally, we had some really good conversations early on. And that's actually how I met VJs, because of initially being a fly on the wall in Paul's Asian session.
That's how I met Sharma.
Yeah, that's how a lot of people met me, through Paul's YouTube. Yeah.
Yeah, I bet if we go long enough, she's gonna be like, half of my friends I've met on YouTube comment threads.
Yeah.
Oh, yeah.
So one of the cool things, the reason why I said initially that, Andy has a unique perspective to the markets is from the mortgage side, right? So a lot of the things, the decisions that the Fed makes, for example, we see initial effects of it in the mortgage side. Like there's so many times that we have talked about, for example, there was a conversation that Andy and I were having where the Fed was talking about the accommodative stance, maintain the accommodative stance, and then also, helping a wider group of people. But that came from the mortgage side, where, that mortgage side was already feeling the pressure. And then Andy and I used to have the conversation. He's like, it doesn't even make sense because what they're trying to do isn't going to work out. And then you see this rippling effect in the speeches that we see in the Forex market that we're analyzing, and the fundamentals and all of that. So what I found really unique about Andy's experience in Forex so far is that everything that's happening, so he's already coming from this background of the mortgage side. So he already knows what's kind of happening on the monetary side. He already knows a little bit of what's going to be happening in the economy and how's that going to be affecting a lot of people. But then also when you're looking at the foreign exchange, you're looking at a much broader perspective. Now it's not just mortgage, right? It's everything else that's affecting the economy.
Oh yeah.
And so what was kind of your struggle like when, you came, how you mentioned like we both looked at it from different perspectives. So what
Yeah.
was your kind of struggle like where, you were able to finally implement all that information in like a more, I guess, like not biased way into the market?
in an effective way, right?
Yeah.
So, well, I think there's a couple. First thing is, I think I had to decouple some things that I knew were interlinked
Mhm.
because of what I know. Decision over here causes this, which leads to this, no matter how much time is in between those things.
Right.
And I had to decouple some of that because the charts are moving so much faster than the way that the banking system accepts a policy, digests it, creates or modifies a current product, and then delivers it to the market for consumers to use, especially loans. So I had to decouple some of the things like that are interconnected on that side, and I had to like stop knowing that information in order to make quality technical or fundamental or sentimental trades based on how sometimes how the market would feel about it, right? So if sentiment is kind of the top priority of the day because there's no technical support or resistance or there's no fundamental change, then how are people feeling about the market? How are they going to just trade it today? What's the path of least resistance? So I had to like re-sort out how to do that. And then coupling those things together, the technical, fundamental, and sentimental side has actually helped really, it was actually helped stop the losing. Because where I would think, oh, well, sentimentally, people should feel this way because I know what that means. Well, it doesn't matter when you're at a technical support for something.
Right.
It doesn't care, right? Because people, let's be honest, like the biggest people trading these markets, they'll shove it whatever direction they want for whatever reason they want. I mean, I'll give you an example. Like last Thursday, it's Thanksgiving, Asian market opens. I'm sitting at my wife's grandmother's house, and I'm looking at the charts. And I'm like, the US 30 is selling off super hard.
Yeah.
And I'm like, it is just oversold on low time frames. It started getting oversold on the hour, the 4 hour. I'm like, it's blowing through daily support. And I'm like, there's a bottom here.
Yeah.
Well, no, there was no bottom. And I'm like, Omicron was like crashing through this thing, right?
Mhm.
Well, and then it recovers for a little bit the next day with no change in the news.
Yeah.
And then they have the first California case identified Wednesday. It starts selling off again. Thursday, they're like, oh, 5 new cases in New York. Like, that's okay. We'll have a bullish day. I'm like, what? It's like some things that will cause trading in one direction. The next day, they don't care about. They just move on from it. And so part of that was, understanding that there can be one of those 3 components ruling the day or ruling the session, and the other 2 are just going to sit in the back seat and be along for the ride. Yeah. That could be any of the sentiment, the fundamentals, or the technical stuff. And then the other thing is, or sorry, the last like kind of part of that thought is that, just having session awareness, because it could change. Something could change just from the London session coming to New York. New information. This is why looking at Forex Factory is important, and understanding what the red folder news is coming out, because sometimes whoever's in the front seat causing trend can be kicked to the back seat real quick when something more important comes up that the traders think is valid for their decision making that day.
Absolutely.
When it comes to the Forex market, you being in here, just a very simple question: how do you like it? Like, do you compared to where you were before or where you're at right now when it comes to the mortgage side? How do you feel about the Forex market?
Well, I really enjoy it actually, because it actually gets to combine
And
things
why?
I really enjoy. Like I've moved on from being a salesperson in mortgage, and I do marketing, and I do video creation and content and all that kind of stuff. And I do a lot of back end support stuff for the office so the company can grow. So I have like this nerdy component and actually creativity. Well, the same is with the charts, and I love being able to understand the economic impact of things. I love watching and how the mechanics of things work. So I started thinking, how can I match my interest for these things, even just from a hobby perspective? I shouldn't be reading CNBC at 28 years old, like for fun, like on a Saturday. Like, what are you doing? Anyways, I just
It's your hobby.
Yeah, I really enjoy it because I feel like I can finally match and pair things I've just been casually interested in, like economics and finance and
Hmm.
the impact of that on the global markets, with something that is lucrative when you can stop the losing, be
Yeah.
unemotional about your trading, be planned out, and then have a schedule for what you're going to do, and admit when you're wrong. That's more of a
Yeah.
personal growth thing, but you have to admit when you're wrong. I've taken plenty of L's, but once I paired all these things together, I stopped the losing, and then now we're on to bigger and better things.
The
So, sorry, go ahead.
I'm sorry. No, I was just gonna say, like, pertaining to that, the timing is also very important as well when it comes to cutting the losing. Like, you could just cut that time down more and more the more you gain that skill. So
Yeah.
I'm glad you're enjoying it, and you see a lot of potential in it as well, and you're
Oh,
starting to turn
totally.
the corner. So that's awesome. Good for you, man.
Totally. Absolutely. And I have friends who trade in other groups, and like they have their own way and their own thing. And like, it's not I don't understand it the way they do. So I don't look
Mhm.
at it even. I hang with you guys, and it makes sense to me. And now that
Yep,
it makes sense, it's become a lot more fun.
100%. Always does.
So how hard was it for you, or like at what point, what was a catalyst pretty much for you where you realized that, okay, well, coming from a fundamental perspective, because that's mostly what you did, right? On the mortgage side, you understood like what the process was like every time a new policy was introduced. So then what was the catalyst that kind of helped you figure out like, okay, well, it's not just fundamentals in the markets that are going to be, what I'm going to be using for taking trades or what's moving the markets. Was there a specific catalyst? Because you could have easily just came in and be like, well, I know how this all works from a money perspective.
Well, yeah, I mean, I kind of alluded to a little earlier, just the timing, right? So a monetary policy can be set over here, and then it has to go through its paces in order before it hits someone's front door, or it
Right.
comes to a bank or a lender like us. And so understanding that the duration of time it takes,
Mm-hmm.
match that with what's happening in the charts. And I did not give enough credence to the higher time frames, such as the quarterly or the monthly. I was stuck in strictly looking at trading from a scalping perspective in the beginning. But once I understood that there were even like more concrete foundational pit stops along the way, I wasn't getting trapped as much. I wasn't getting fleshed out, and that really helped me. That helped change a lot actually, because when I started going to those higher hires with you VJ, then I said, oh shoot, we're actually really close to this monthly or close to this quarterly. So don't expect that push to come right away. It's gonna test it, come back, hit it again, and then finally end up going when there's a big reason for it.
Yeah.
Now, Andy, we did our Zoom, and obviously we aligned very well with our philosophies and what we think and stuff like that. Now, one thing that you mentioned in the beginning that I think is going to bring a lot of value to a lot of people is you were trading and you were in the markets during the 2008 market crash. So, what are some similarities that you're seeing right now going on in the world with policy, with um, supply chain issues, anything going on right now, the price of oil. What is all this? What are the similarities between 2008 and right now?
So
And
there,
were you? Yeah.
yeah, go ahead.
No. I was gonna say, like, where do you think this is going? Like, what can you see if you could put on your
Sure,
what's his name
sure.
from The Big Short, his hat,
Michael
Michael.
Burry.
Yeah.
Yeah.
Put
Um,
that hat on right now.
so there's actually some things that are very similar, but even in their similarities, there's vast and stark differences. And I'll
Oh
give
yeah.
you a couple examples, and I'll do it as quickly as I can, and as simply as I can. But the first thing is there are definitely markers in the market that people who've been calling these things, that are analysts and economists, they've been calling these things for decades. Like, oh, they've seen the stuff from the 70s that I haven't seen. I've only learned about in history, right? Um, so they may have an upper hand on this, but house prices are really high, mortgage rates are really low. Affordability is now kind of the new flex. Affordability is now the issue, because even if the Fed eventually runs out of bullets. I don't work at the Fed. I don't know anybody at the Fed, but you hang around them long enough, they kind of show you all the tools they have, because their job is to keep things in check. And when things are not kept in check, they start making moves. Sometimes they make moves very quickly, very early that end up overdoing it, but it's only after it goes too far that they go, oh shoot, we overdid it, or we did this thing for too long. And then you have issues like we're having now, which is the conversation around inflation starts as transitory now, because now they go, well, we can't be saying that anymore because we know it's not true. The data's not supporting it. And then we're going to be living with inflation well into 2022. Well, now that's not
It's never
transitory.
transitory.
Right. Yeah. And that's yeah. Well, and here's something that is different about that, right? So when prices are going down, no one ever says it's transitory on the way down, right? And no one also ever says it's going to last longer than expected. They just go, oh, prices are down, and that's it. It's like all math, all calculations of things going down just aren't spoken of in the other manner. There's it's going down, and it's good. It's good because it's going down. So I think, I think in some ways the equities are really inflated. Just my personal opinion. I think equities are really inflated because at some point you actually have to get back to actual shareholder value. And I think that also happened when people were in the finance market shoving money into the mortgage market and issuing loans to people that they honestly could not afford. But the qualification standards were so loose that it drove prices up. And, a fixed rate back then was like 5.5%, 6.5%, but you could interest only loan for 5 years or 7 years or 10, or you can get a negative amortization loan because house prices were rising. So you could pay less than the amount of interest owed, and the difference that you didn't pay would just get tacked onto your loan balance. So you had a climbing loan balance, climbing home values, and small payments, which drove this huge boom of people being able to afford getting in homes. Mm-hmm. So some similar outcomes are happening in the fact that house prices are appreciating, but it's not for the same reasons. This time, it's because you have fixed money really cheap, down in the low twos for like our VA people, our veterans and our active duty military, 2.25% for a $750,000 loan for 30 years. That's cheap money. And then you have demand, and then you have lack of supply, which is pushing prices high, matched with the low cost of money, which they can afford, is what's allowing all this, I'll say, inflated house price to actually be valid mathematically, not just theoretically. So even though you have high prices over in 2008 or 2007, 2008, high prices right now, they're for very different reasons. And some of that actually has to do with financial reform that happened in 2010 and the Dodd-Frank Act, or Frank-Dodd Act. And that's why you have a lot less risky financial products for mortgages and much more traditional fixed 30-year kind of stuff. And there's not a lot of, the underwriting standards have changed. The qualification requirements are a lot more stringent. So they're way more stringent than they were before. And we're dealing with the same thing, highest home appreciation in ever, equity at all-time highs. I mean, it's so similar outcomes, but for very different reasons.
YouTube previously talked about that on a podcast, I believe, right?
Yeah, it was a video that we recorded. It was about the Evergrande and then the U.S. debt ceiling.
I remember that. I watched that whole thing. I was going to say that's something that you guys could plug right now for anyone else to watch if you want to get more into what Andy just said.
Yeah.
I don't know what date or what range.
It's posted on my YouTube. So if you just go onto my YouTube, it's the U.S. debt ceiling and Evergrande video that we did, where we go into more detail about exactly what's happening and with the whole Evergrande situation, and then even we translated that into the U.S. What's happening in the US, where the potential consequences of whatever's happening with Evergrande in China, if that were to ripple over, then how would that affect the US?
Yeah. And even in that situation compared to now, it's all about exposure. How exposed is any one nation's financial market to whatever threat there is? So right. the risk exposure back in 2008, 2009, it was, or I should say leading up to 2008, was massive. It was so huge. I remember sitting downstairs in the living room at midnight watching the Asian market open and people literally panicking. We don't know, to bankers, CEOs. I mean, I don't know how old both of you were at that point, but for the weeks and months that followed that collapse, I mean, there were a lot of people that took their own life, that were in banking, that were CEOs, that were fund managers, because they literally lost not only everything for themselves, but for millions of people. And So I think exposure and how much risk any fund manager has or any nation has a lot to do with what will or will not cause threats. I'll say this time around, not saying there's going to be a crash, but there's going to be a correction. There has to be a correction at some point.
Absolutely, because we're seeing similar situations right now too, right? Where
Yeah,
everyone knows what it's kind of leading up to, and we are seeing, like, for example, CEOs stepping down, right? And we are seeing similar, even with housing, for example. Like, I'm not on the mortgage side, but I'm a different side of real estate, but I see those high prices, right? And I see, like, my investors kind of like worrying about, like, I don't think this number is going to work out for me, but that's a very nice property. So there's a lot of fear also on that aspect, where a lot of people are now starting to step back because they
yeah.
understand that we're getting closer and closer to this, like, plateau pretty much of the real estate market, if not a correction.
Well, I mean, eventually you have to face the math, right? Eventually you just have to, and that's in the charts too. I mean,
Yeah.
I'll draw a correlation in just a second, right? So like you have to face the math. Like as an investor for real estate, you're going, okay, yeah, I can maybe buy this place. I could outbid somebody else, but at what expense? Am I cutting into
Exactly.
my margin completely? So what am I doing? I'm just buying a lot with dirt and a building on top of it, but
Yeah.
there's no cash flow. What's the value in that? Because you're making 0% return for how many years until it starts returning something,
Mhm.
or losing value until it returns something.
Yeah. Like, if I
Similarly,
wanted to fix a house and flip it in, like, let's say 3 months, then, like, what's the value that I could get in 3 months? But again, there's that uncertainty around it,
yeah, absolutely,
around real
absolutely.
estate.
And similarly, like if you're on the charts and you're trying to hit a target that's not realistic in the time frame you're looking at it, then
Exactly.
you eventually just face the technical part of what you're trying and aspiring to happen versus
Right.
what could actually happen.
Right. So I think we have great information here that everyone could kind of learn from, because it's a whole different perspective, right? We've seen a lot of people come in from, like, they're doing other jobs and then they're coming into Forex as like another stream of income, but you bring in a whole different perspective to the markets, right? You come in from that fundamental side because you see exactly how these policies have played out over the years. So to end it off, like, from the time that you started trading, and now Andy's pretty much the only one in our group who trades US 30, like, frequently, or like consecutively. Like, no one else really trades US 30 like that. And, like, you've been killing it on the charts lately too. So then, from the beginning of your journey until now, if there were, like, two lessons, primary lessons, that you think, like, everyone should be, for sure paying attention to if you're starting off in trading, like, what would those two lessons be? So I know you said timing, plan trades, and
Okay,
then, yeah.
I'm going to say two things that may not even make sense, but I'm going to say that the first thing is be disciplined in everything you're doing, right? Because I think that carries with you everywhere. So I know in our accountability thread in our group, there's discipline for people having new dietary habits and even their exercise habits and sleeping habits. And I think discipline and consistency go a long way, and they go way overlooked when it comes to anything we do in life. But when you
Yeah.
apply it in trading too, and you have discipline and consistency, you're going to do really, really well. The other thing is, I think you need to find something to trade that you like and that you understand. I don't understand a lot of international pairs because they're not what I've done for 15 years.
Yeah.
I've watched bond activity and stock market activity for a decade and a half and never did anything about it. And now I'm like, oh, I understand this. I can actually do something about it. Okay, that's cool. But I think when you find something you like, and this is why I stick with US 30, is because when you can understand it and you know what makes it move, I'm interested in studying it and learning it and then winning in it.
Mhm.
I'm not as interested in GU. I'm sorry, I'm not, because it's not interesting to me.
Mm.
GJ is interesting to me occasionally when there's flights to safety. Yeah. Otherwise, I'm not watching it every single day.
Mhm.
Gold is interesting to me because it's still connected to scarcity a little
Everything.
bit, but more inflation and flight to safety and that kind of thing. Again, more of the sentiment kind of side. But I think that people need to find something that they enjoy watching, learning about, and studying. That's going to take them way further, because you could pick anything from a really long list of things to trade. If you don't like it and you're not interested in it, you're not seeking out information to help you be better at it, then it becomes a force function. You have to force yourself in order
Yeah,
to learn anything about it and then try to be good at it, versus waking up every day interested and eager.
it's a great point.
Essentially, pretty much, you want to know everything you can about whatever you're trading. So with US 30, you have the technical side. A lot of people, they'll wake up and, like you said, the long list of pairs, they'll just pick one. They're like, okay, technically, I'm just going to apply the same exact strategy that I've used on a different pair.
Yeah.
But what pretty much you're saying is pick that one pair and you want to know every single thing about it. If you're trading gold, then you want to know exactly, why do people move to gold, right? Why is there a push up that happens in gold from a fundamental way? You want to understand, like, okay, well, fundamentally, yeah, there's this policy coming out. Yes, there's this inflation coming out. Yes, there's that fear coming out. But how long is it going to take to actually reflect into the markets, right? And that's your entire market sentiment, because the human sentiment is always going to take some time to change over time.
Yeah.
And then you obviously want to know the technical side. So understand everything that you can from all three analyses perspective about the markets.
Yeah. Yep.
Awesome. Yeah. Do you have anything else, Stefanos?
No, I think like I said before, we were on like an hour Zoom, just kind of going back and forth, and I basically asked all my questions then. So I was just thinking of one question that would be really good for everyone else, that they could get something out of this, and that was, what you're thinking of the market in your past experience. I mean, I was in 8th grade. Sharma was even younger back in 2008.
Yeah.
So yeah, that'll make you feel good. My bad.
Well,
no, I'm in that part of life
Andy.
where I'm the old guy in the room now.
What was that?
I'm at that part of my life now where I'm the old guy in the room now.
I'm starting to feel like that with Sharma.
Well, my oldest kid is 16. You guys are closer to her age than you are to mine.
Wow, that's crazy. I mean, I'm 27, so maybe not.
11. Yeah, I'm 40. I'm 42, so I'm already 15 past it.
There you go.
Well, thank you so much for hopping on today, Andy. I really appreciate it. And I hope like everyone got to learn something, at least from this call, because I think this was a very unique perspective to the markets. It's not the average person who usually comes in to trade that, usually who we get to talk to, like on Instagram or YouTube or, any other platform. I think this was pretty unique coming into the markets, and how pretty much this is someone who came in with fundamental analysis. Not a lot of people do that. A lot of people come in with technical, right? Yeah. It's quite easy for them to look at the charts. So I think that was a good like progression that you've had, I guess would be to put it, from 2019 until now, like all the things that you have learned in 2 years, because it takes a lot of people a lot more years to learn all the things that you have in the market.
And the expertise that you have with the fundamentals too. It's not just like, fundamentals. It's like you're very in depth with it.
But the unlearning was the hardest part. Learning new things is great, but like unlearning things that mechanically have always gone together was really the steepest challenge for me. Yeah,
we've always talked about that too. I'm pretty sure we've had like multiple calls about that. Just like, yes, this is happening from the mortgage side. And like, how do you apply that to foreign exchange?
Oh yeah, I remember when gold was selling off hard last summer, August of 2020, I think it was. I was like, VJ, this other thing just came out. Why is gold selling off like a bandit? And it didn't make sense to me. I was like, I don't understand this, because this part of me, that part of knowledge nugget I had equals gold should be like skyrocketing, and it was selling off hard. I'm like, oh my God, I'm like losing it right now.
Yeah, so that was pretty much the progression that we've seen, right? Overall with specifically with you, Andy, and then US 30 as well. But I really appreciate it. Thank you so much for hopping on, Andy.
Thank you guys
so much, buddy.
Yeah, thanks. And if anyone had any questions, they want to contact you, how would they do that?
Best way, you can actually reach me through Instagram at @theandycruz. Obviously, if you're in our Discord and you're watching this, you can just DM me, and I'd be happy to talk to anybody that way.
All right, awesome. Well, thank you everyone for watching this, and thank you, Andy, for hopping on.
Thanks, thank you guys. Have a good day.
You too.